week. My name is Belugina, and here is our webinar of Forex Outlook for this week. As usual, we will summarize the results of the past week, talk about the Forex market trends, and outline the main scenarios for this week and the main trade ideas. So let's begin. I hope that this information will be valuable for your trading. As usually, I'd like to point out that it is a very good idea to outline the weekly trade ideas on Monday or maybe a bit in advance on Sunday, because this way we can have the full picture of the market and we can plan our trades better. Our plan, as usual, is the following. Firstly, we study how the market is positioned. Then we turn to the economic calendar to see what are the important events of this week. And we switch to the Forex charts, to MT4, to make technical analysis of the main currency pairs. And then we have the summary and trade ideas. So during the past week, US dollar suffered versus almost all major currencies except the British pound. We can see here that GBP USD currency pair made a small decline, while US dollar weakened against the euro, Japanese yen, Swiss franc, Australian dollar, and also we have metals here, and gold made a strong advance versus the greenback. The week of losses for American currency was caused by the results of the Federal Reserve's meeting. I can remind you that American Central Bank left the federal funds rate unchanged in the current range between 0.25 and 0.50%. The Federal Reserve signaled that it could tighten monetary policy by the end of 2016. But at the same time, the Fed projected a less aggressive increase in rates next year and in 2018. And it also cut a long-term interest rate forecast from 3% to 2.9%. As a result, on the one hand, the Fed still looks likely to raise rates in December, and this fact provides support to the US dollar. According to the futures market, the probability of such outcome accounts for a bit more than 50%. On the other hand, the lower projected path for interest rate hikes in the US decreased the overall demand for the greenback. So, in my opinion, we see that there was negative effect on the US dollar after the September meeting of the Federal Reserve, but I believe that this effect will be moderate in the medium term, because as we have discussed in the previous week, no one really thought that the Federal Reserve would increase interest rates in September. The possibility of such outcome was rather low, around 15%. So as traders didn't expect much, they weren't very disappointed by the fact that the Federal Reserve decided not to raise interest rates in September. If you look at the possibility of December rate hike, it is still not priced in fully. There is potential for more growth of these expectations and more growth in the US dollar. And once again, everything depends on the incoming data from the US. The Federal Reserve will be watching these data releases, and depending on them, will make its judgment about the December rate hike. But if the current trends in American data continue, I think that the main scenario will be that the Fed will raise interest rates in December. So, in my opinion, the closer to December we'll get, the higher will the US dollar get. This week, we'll have another factors which will be the main movers of the Forex market. I mean the first US presidential debate and the Global Energy Forum in Algeria, which will set the further path for the dynamics of oil prices. Also, we'll get some releases from the US, but this I expect won't be the main driver of the market. So, how is the market positioned? We can see that the recent data from CFTC, Commodity Futures Trading Commission, which were released on Friday, show that the market's positioning ahead of the Federal Reserve's meeting was more or less positive. The overall USD net long position increased. I remind you that this data from CFTC come with the time lag. So these are the data for the week which ended on Tuesday, September 20th. And here we can see that after the Federal Reserve's meeting, of course, this positioning has changed a bit. But still, we can have some valuable insights from this data. For example, we can see that the aggregate USD position, although it is in the positive territory of net longs, it's still not as big as, for example, in November 2015. So there is scope for increase in the US dollar bullish position. This is also another reason to think that the decline of the US dollar currency should be limited. If we look at the sentiment towards other major currencies, we can see that bearish positions on the euro increased. It was the week before the Federal Reserve's meeting. We have a rather large position in euro, and I think that the next meeting will show us that this position declined. The bearish sentiment towards British pound decreased. We saw some correction in British pound to the upside. However, the reduction in negative position on the British pound, we see that the market players, the bears, those who want to sell British pound, will now feel more eager and more free to enter new short positions and to once again sell the British pound. We had a correction at the market, the squeeze of short positions, and now we have better levels to sell the British pound. Also, we saw some increase in bullish position on Japanese yen. Maybe there will be some changes after the Bank of Japan's meeting, but the results of this meeting are kind of controversial, and I am sure that even the most up-to-date market players, some speculators which are ahead of the market, still haven't decided on the opinion they have about the results of this meeting, because the current stage of the Bank of Japan's monetary policy is kind of complicated. We can see that the central bank has already done many different measures, and now there are slight changes in these measures, and the market players don't know how to react. These changes in the Bank of Japan's policy will make an impact on the state of Japanese economy, on the state of Japanese inflation, and on the yen consequently or not. It is still to be decided in the forthcoming weeks. and even maybe months, because really it is very difficult to judge the Bank of Japan's policy at the current moment of time. So these are the main trends in markets positioning. We can see that the US dollar index, which tracks the dynamics of American currency against of 6 other currencies, which are the currencies of America's main trading partners. Well, here we have a kind of consolidation for already several months. And we can see that after the Federal Reserve's meeting, there was a spike to the downside towards 95 points. But then US dollar recovered, currently returned to the middle of its consolidation range. We can see a triangle here at the chart of the US dollar index. And I expect that the sideways dynamics of American currency will continue this week as well. We may see US dollar gain versus some currencies, decline versus other currency. Probably the declines will be the main move of the US dollar, but still I don't expect these trend lines, these triangle lines, to be seriously violated during the coming trading days. And also here we have the chart of oil. Brent oil is here, and today is the start of a global energy forum in Algeria. I have some info about it. Let's spend a couple of minutes analyzing the consequences of this event, because it will affect commodity markets, it will affect the US dollar and consequently other major Forex currencies. And also the market's risk sentiment is closely dependent on the dynamics of such key resource, such key commodity as oil. The meeting starts today on Monday, and it will take 3 days. It will end on Wednesday. And according to the sources, the informal meeting between nations which are in OPEC and which are not the members of this organization will take place on Wednesday, September 28th. Still, we can have some announcements from the world's largest oil producers on Monday, on Tuesday as well. So be ready for the market's volatility, be ready for the swings in oil price. Many oil producers, the key players, will attend this International Energy Forum. The main topic will be discussion whether to freeze oil production at the current levels. And we remember that the meeting with such topic already took place in April, but unlike back then, now Iran might be willing to be more cooperative. Iran managed to increase production to near pre-sanction levels. It has increased its oil output sharply in the past month, and now it has come to levels of production which are more acceptable for the country's authorities. So they will likely be willing to negotiate with their key rival, Saudi Arabia, and other producers, including Russia and OPEC members as well. However, we can see that the production increased not only in Iran, it also increased in Russia, Saudi Arabia, and Iraq. And as a result, production is now at its record high levels. So even if we have the freeze of production at these levels, The odds are and the risks are that it won't affect the market of oil and won't have the price to get up from the current levels, because such freeze agreement won't really change anything. If the large producers agree to cut production, even maybe make a slight cut to their production levels, this will be something new. This will be something that the oil market isn't pricing in, and in this case the price should move towards $50 per barrel mark and maybe try to test levels above it. It will be still very difficult for oil to overcome this $50 per barrel mark, but still the possibility of test of this level will be very pronounced in this case. However, the baseline scenario is that there will be no decision or a kind of freeze production decision, and as a result oil will remain trading below $50 per barrel mark. If we look at the Brent oil chart, the daily chart, we'll see that the pressure on the support line in this case will intensify, and the pressure on levels around $45 per barrel will be bearish and probably will get a slide of prices below this level. In the longer term, in the medium term, there are more negative factors for oil than the positive ones, in my opinion. And now the economic calendar, the highlights of this week. Today on Monday, later we'll hear some more remarks from the ECB President Mario Draghi. He will be also speaking one more time later this week, and we can see that Draghi is speaking rather often. Every week we'll have speeches from him. So far he didn't say anything really market moving, and in my opinion such comments from Draghi will come only if euro dollar moves above 1.14 and approaches 1.15. Then Mario Draghi will try probably to speak down the euro to persuade the market that the ECB will do something to further increase monetary stimulus in the euro area. So far, traders do not expect some near-term measures from the ECB. Here the picture looks rather stable. We see that the euro is behaving in a rather stable fashion versus the US dollar. It has shown real resilience in the past months and weeks, and probably we'll have a look at the chart right now just to speak about the euro and give you the full picture. We can see that for I can say 6 weeks, euro dollar was limited on the upside by 100-week moving average, and currently the pair is testing levels above this line. If we have the weekly close above this average line at 1.1225, this will be a positive signal for the euro dollar, and it will make us targets levels around 1.15 mark. There will be challenges ahead for the euro dollar. The challenges are mainly in form of events from the United States. As for the euro area's economic calendar, we'll have Draghi's speeches, and also there will be the euro area's inflation data on Friday. So remember to watch this indicator. All in all, we can see that one of the sources of such resilience of the euro against the US currency, of course, is the weakness of the US dollar. But another reason is that the current policy of the European central banks, the negative interest rates which are charged on the commercial banks' deposits in the central bank, make the profitability of European commercial banks decline, and as a result, these commercial banks are not eager to take foreign exchange risk. They don't move money away from the euro area. All money, well, not all money, but a great deal of money remain within the euro area. And euro is acting as a kind of safe haven. So we see that the euro doesn't depreciate against the greenback. This week, there is potential for higher rates of euro-dollar currency pair. We can see that there is weekly resistance of pivot indicator at 1.1280. And also there is resistance line drawn through August and September highs. This line is located just below 1.13 mark. A break of this resistance will make the pair aim for higher levels, for levels around 1.1415. This is our third weekly pivot resistance line. So this will be our target. We can see that the weekly pivot level is located at 1.12, around the middle of this range where the euro dollar is trading in late August and the major part of September. There are serious support levels around 1.1146. Here we have the pivot support line, also 200-day moving average, and the 50-day moving average is getting ready to get above 100-day moving average. Probably will get this move. If you want to buy the euro, my advice is to take small bullish positions here, because we have seen that there were sellers of the single currency around 1.13 and a bit higher in the previous 2 months. Also, looking at the technical indicators, we can see that in the short term, the euro looks a bit overbought, so maybe a bit lower levels would be better for this bullish position. As for support levels, they are located once again at 1.12 and 1.1150. We have good support in this area, and I believe that it will limit the downside for the euro this week. Let's return a bit to our economic calendar. We have spoken about the euro dollar, and now a bit more about what are the benchmark events for the market which will take place this week. On Monday, there will be first US presidential debate. The timing is 21 local time, American time, and if we speak about GMT, it will be 1 a.m. GMT on Tuesday. So this is the time to watch the battle between Hillary Clinton and Donald Trump if you want to watch it live. Why should we put this event in our economic calendar? The thing is that these two candidates for the position of the head of the US state are very different. They have very different views on the whole range of policies. And if Hillary Clinton is the Democratic candidate, which will be a kind of inheritance to Barack Obama and the current policy of the US. If Donald Trump becomes president, this will be an element of high uncertainty for the market. He is known for his wild commands and kind of controversial opinions on many problems. He has some propositions for US economy which are aimed on tax cuts, on making US goods more competitive. And if Trump wins this first US presidential debate, then it will be a bullish event for the US dollar. The greenback will appreciate as a kind of safe haven, and because Trump's policy is expected to be bullish for the US dollar. So many important topics should come up at this first debate. It will be very important how the candidates face each other for the first time. So I think that tomorrow in the morning on Tuesday, we'll get a lot of these debates affecting the movements of the currency market, taking into account the fact that the economic calendar on Tuesday is rather light. There is only consumer confidence in the US and also comments from the Vice Chairman of the Federal Reserve, Stanley Fischer. The factor of the US presidential elections will be one of the main drivers of the currency market. Here we can just see that the spread between the main candidates, the lead of Hillary Clinton ahead of Donald Trump isn't very big. So then if we have this gap narrow in favor of Trump, then it will be bullish for the US dollar. We'll get more uncertainty ahead of US elections, which in fact will take place on November 8th. So plenty of uncertainty in the coming weeks. And surely this will be one of the main topics we'll be discussing. On Wednesday, US will release core durable goods orders figures. The Fed chairwoman, Janet Yellen, will testify. We might hear more comments about the US monetary policy. Yellen will have to defend the policy in front of the US Congress. So the markets will be watching her remarks, probably not as eagerly as they have been watching the Federal Reserve's press conference last week, but still Yellen's comments on Wednesday and also on Thursday will be watched. And once again on Wednesday, we will be looking for announcements of International Energy Forum in Algiers. Regrettably, we don't have the exact timing of such announcements, because no one has this timing. There will be a live discussion between the largest oil producers. So this is the factor of uncertainty, which will surely complicate trading on Wednesday. On Thursday, there will be some remarks from the Bank of Japan Governor Kuroda. There will be the final US GDP for the second quarter, and these are the main events. On Friday, unofficial manufacturing PMI from China. It's always important to know how Chinese manufacturing sector is developing, because China is the consumer of many commodities, and this data releases has great impact on Australian dollar and New Zealand dollar as well. Britain will release current account figures and will get Canada's GDP. So this is These are the main highlights of the week, the main economic events we have to be prepared for. We now return to our currency analysis, and we continue with British pound. We can see that on the weekly chart here, we had a small candle last week. British pound was the only currency among the major currencies which depreciated against the weak greenback last week. It happened as the concerns about the future of the UK economy after the Brexit vote have intensified. We heard comments from the British Foreign Secretary Boris Johnson that the UK will start the procedures of separating from the European Union at the beginning of 2017. There is also news that Michel Barnier, the European Commission's chief Brexit negotiator, will begin work next Saturday. And we can see that this process of Britain getting out of the EU is getting set in motion. So uncertainty for the future of British economy is once again driving the currency market. Of course, so far the economic figures out of the UK were rather positive, but traders and analysts fear that this may change, and there are expectations that the Bank of England will still decrease the interest rate, will ease monetary policy in November. So we can see that this lower border of the trading range within which GBP USD has been trading since Brexit will be vulnerable for bears. There are many economists among the major investment banks which gave us the targets for GBP USD around 1.25, 1.22. So if we have the break below this lower level, then the move will be of the magnitude which is roughly equal to the this range. So the levels of 1.25, 1.22 look rather natural, look logical. Still, British pound is trading at the multi-year lows, and this provides support for this pair. If we look at the chart, we can see that GBP USD is testing to the downside, the line which has been drawn through July and August minimums. Lower minimum in this case will be a bearish signal, and below 1.29 we'll be looking at 1.2876. This is the weekly pivot support number 1, and 1.2790. This is the weekly pivot support number 2, and also this is the post-Brexit minimum of this pair. I remind you that this pivot point indicator is a very valuable tool for the weekly analysis of the currency pair. Here we have this light blue level at 1.2998. Roughly we can say that it is at 1.30, which is the key psychological level for British pound US dollar. And as long as we trade below this level, it means that the outlook for the currency is bearish, and that it will likely test this dark blue support lines I have mentioned. Also pay attention to the fact that Some analysts say that the outlook for British pound will remain bearish as long as we have resistance at 1.34, 1.35 in place, as long as the pair is trading below this level. So even if there is an increase in British pound, which at this point looks not very likely, these will be levels to sell the British currency. If we look at this candle of the last week, it has a small body. This means that it was hard for the sellers to make British pound get lower. It means that British pound has some support. There are buyers at this level, and there is chance that we'll see some recovery of British pound to levels around 1.3229. If we have this chart if we have this 4-hour chart junior time frame, we can see that the current move to 1.2924 is not supported by a MACD indicator. Here we have some small divergence, and I believe that we should wait for levels around 1.30 to open new short positions on British pound. However, here at the 4-hour chart, we can see that the 50 period moving average went below, firstly, 100 period moving average, and secondly, 200 period moving average. And this looks like the beginning of bearish trend. So, in my opinion, British pound should go and test the mentioned support levels of 1.2790 in maybe by the end of the week or in the next week. So in my opinion, if we don't look at what is happening with the US dollar and the broad trends of the US dollar, British pound looks vulnerable for the downside. We saw already last week that GBP USD can decline even if US dollar is weak versus other currencies. So here we can see an exception if the US dollar declines. Increase above 1.30 will make us look for a correction to the upside, and as I've already said, there are resistance levels around 1.3080 and 1.32 where we will look for new short positions and the reversal to the downside. We come to the US dollar Japanese yen currency pair. We can see at the weekly chart that the pair declined, and that the resistance line of 2016 is still broadly in place. So as the main support mark, which is located at 100 yen per dollar level. We should talk a bit about the Bank of Japan here, because it is one of the most important factors for the dollar yen. The Bank of Japan did announce something new. It shifted from targeting base money to targeting 10-year government bond yield in order to limit the negative impact on profitability of commercial banks. At the same time, the regulator didn't increase the size of its monetary stimulus program, and that's why after the initial decline, Japanese yen strengthened and dollar yen went down. The fact that the Federal Reserve signaled a slower path of interest rate hikes in the coming years also deprived the pair from bullish drivers. And this is why we got what we got, the overall decline of the pair. In my opinion, the lack of additional monetary stimulus in form of more asset purchases or lower interest rate will be a negative factor for dollar yen, and negative factors will prevail for this currency pair in the coming week. In my opinion, the bearish pressure on 100 mark will intensify, and we may see the pair testing levels below this important point. On the one hand, levels to targets I would mention at, let's see them. They will be around 99.70 and 98.60. I don't think that we'll get some sharp decline below 100 yen mark to the levels around 95 yen per dollar. No, there will be the risk of monetary interventions from Japanese monetary authorities. They have already said that they are closely monitoring the situation in the currency market, and the volatile moves will make them make at least verbal interventions. I think if we have levels below 100 yen, then we'll get commands from Japanese monetary authorities, and as a result, the spikes of dollar yen to the downside will take place, but they will be very short term, and we'll see buyers around 99.80 and 99.98.60 marks. So be careful with your short positions. Overall, dollar yen should remain somewhere between 101.50 and 99.50 this week. Support also for the pair is provided by the fact that as the Bank of Japan didn't make additional monetary easing, the market players will still expect the Bank of Japan to make these steps at further meetings as inflation continues to remain rather low in Japan. So this is a kind of trading strategy for dollar yen. If we have upside, then watch resistance levels at 101.20. 102.50 should be a good level to re-enter short positions on dollar yen, but having conservative targets around 100 yen mark. Also, we can speak a bit about other currencies, like Australian dollar, for example. Here, the weekly chart shows that the bulls have managed to recover from the upside of the weekly Ishimoku cloud around 0.7490. The pair closed last week above 100-week moving average at 0.7565, and this level is currently supporting the pair. And Australian dollar can test higher levels around 0.77. Let's have a look at it at the daily chart, 0.77. And here we can see that this area represents a strong resistance despite the recent weakness of the US dollar. I think that here we may once again find sellers of Australian currency versus the US dollar. So in my opinion, it is not a very good idea to set take profit levels above 0.77 or 0.7750, because it increases the risks that this level won't be hit. Australian dollar will once again get lower to the current levels, for example, and we'll don't have our profit here. So maybe take profit around 0.77 looks like a better idea. And then we'll get clues from the meeting of oil exporters and US presidential debates, which will form the market's risk sentiment for this week and help us understand whether the riskier assets such as Australian dollar will have enough strength to overcome resistance levels and test higher levels. For example, for Australian dollar, these higher targets lie around 0.7850. But based on the current information we have, we can't make this judgment of higher levels in riskier assets and higher levels of Australian dollar. If you look at the technical chart, we can see that the daily moving average are more or less horizontal, and this means that the move to the upside for now lacks bullish momentum. The pair will be inclined to trade around these moving averages, and also daily stochastics indicator is now in the overbought area. We have here a bearish signal, which may mean that the current phase of increase in Australian dollar is coming to an end. Support is located at 0.76, 0.7580. Here we have 50-day moving average. And if we have decline below this level, the targets will be around 0.75, 0.7490. These are the levels near 2016 support line, near important levels on the weekly chart as we have seen them, and 100-day moving average as well. So here I also don't expect the market to leave some big and sustained long-term ranges. As we can see for Australian dollar, this range is limited by this support line, which is drawn through March and August highs. And in terms of a support line, this is a support line through January and May minimums. So we have to work with this range for Australian dollar, and I believe that some good trades may be done here. If you have more short-term chart, here the picture looks like we should look for some more increase, but look for levels to sell the currency near 0.77. Here the picture also shows something like that. As for New Zealand dollar, the weekly chart, we can see that this weekly high near 0.75 continues to dominate this market. We have a weekly MACD indicator decline, weekly stochastics decline. Last week's candle has a long upper shadow, which highlights resistance at 0.7360. And despite the general weakness of the US dollar, New Zealand's dollar isn't looking very good either. There are still expectations that the Reserve Bank of New Zealand will have to ease monetary policy in the coming months. So here be careful with the pair. we see that on the daily chart, support is located at 0.7227. This is 50-day moving average, and decline below this level will make us target 0.7107. This is 100-day moving average, the next target. Canadian dollar has declined versus the greenback in the last day. We are close to the top of the range where the market has spent many months. We are close to resistance provided by 200-day moving average at 1.3242. I would like to remind you that the pair is strongly correlated with the moves in oil, so news from Algeria and International Energy Summit will be important for the pair. Good news will make us return to 1.30. Bad news will make the pair test resistance at 1.33, 1.34. And also, the Bank of Canada's policy looks now more dovish. This is a negative factor for Canadian dollar, positive factor for US dollar, Canadian dollar currency pair. And we'll also watch Canadian GDP figures on Friday. But the GDP figures, on the contrary, may represent some bullish risk for Canadian currency because overall stability of oil prices may have helped Canadian economy. So I believe that it will be very difficult for the pair to leave these ranges to test this strong resistance. In my opinion, bullish positions at the current levels look risky, and maybe a confirmation of the pair's increase above this 200-day moving average will be enough reason for buying the pair. But I would recommend you to choose some other assets to trade this week, like euro dollar, British pound, US dollar, or just dollar yen or Australian dollar. The main forex pairs look better than the US dollar, Canadian dollar, in my opinion. So this is it. Let's now make a conclusion of our today's presentation and our recommendations for the week from September 26th to September 30th. US dollar is still negatively affected by the results of the Federal Reserve's meeting. The US Central Bank has decided to leave the benchmark interest rate unchanged and not to raise this rate. On the one hand, it strengthened the view that there will be a rate hike in December, but on the other hand, it lowered the forecasts for the federal funds rate in 2017 and 2018, and this affects the overall demand for the greenback. As traders didn't expect much from the Federal Reserve September meeting, the disappointment wasn't big, and in my opinion, the decline of the US dollar won't be very long. Perhaps the US dollar will remain under pressure this week, but it should then improve as the market will be still expecting the rate hike in December, and this is a very different situation from what other major central banks have and what they have to do in future. Other events which we should focus on this week include the first US presidential debate with Democratic candidate Hillary Clinton and Republican Donald Trump. having a verbal battle early on Tuesday. If we look at the GMT time, more support of Trump, the more narrow gap between Hillary Clinton and Donald Trump will be positive for the US dollar, while a convincing result of this debate won by Hillary Clinton will make the US dollar decline versus more riskier assets like Australian dollar, Canadian dollar, and New Zealand dollar. Also, we have the International Energy Forum, which will take place from Monday to Wednesday in Algeria. Here, the possibility of some serious agreement, which will have to lift oil prices above $50 per barrel, is low, as oil producers already produce a lot of oil, but still will have the comments from participants of this forum, and they will likely cause a lot of volatility, commodity, and also Forex market. If we have an overview of the main Forex currency pairs, I must say that the euro dollar looks likely to test higher levels around 1.1280, 1.13. There will be resistance at this point and some serious sellers. But if these levels are managed to overcome by the bulls, then the target will lie at 1.1440, 1.1415. These levels may be considered dangerous by the European Central Bank, and we'll be watching comments of the ECB President Mario Draghi later on Monday and then on Wednesday. Euro dollar is supported at 1.12 and 1.1150, and the general outlook for the euro is rather positive. We'll get higher levels or we'll buy at lower levels. British pound looks negative as uncertainty about Brexit is once again increasing, and below 1.28 will target below 1.29. I'm sorry, we'll target 1.2875 and 1.2790. If we have some correction to the upside, it will face resistance at 1.3080 at 1.32. No major news will be released in the UK this week, so just the general sentiment and just the Brexit uncertainty to affect the pair. Dollar yen is once again squeezed between 2016 resistance line around 101.50 and the key support of $100 per yen. Decline below the latter level will open the way down to levels around 99.80, 98.60. But I believe that the spikes of dollar yen to the downside, although they will take place, will be very short term because of the risk of Japanese monetary policy interventions. And finally, Australian dollar, US dollar has a good chance to test 0.77 mark, but this is a place of great resistance for Australian currency, and we'll need further hints to decide whether it is ready to break above this long-term resistance or it will reverse to target levels around 0.75. This is all for today. I thank you for your attention. I wish you a good trading week, and we'll see each other next Monday as well at 12 p.m. GMT. So stay in touch with Forex markets, with FBS and FX Street, and see you next week. Bye.